Is my investment portfolio showing red? And what does that mean? Hi everyone, welcome to my YouTube channel. Is your investment portfolio showing red? And what does that mean? Yes, it can be very scary when you see your investment portfolio showing red. Red basically means you're down on your investment. The fear kicks in and you think you've lost your money. I'm not talking about trading here. I'm talking about investment. All my subsequent videos will be talking about investment. I explain in my previous videos. So if you want to understand what I'm talking about when I talk about investment, you have to watch my previous videos. Yes, your portfolio is showing red. What does that mean? It means you're down. It means the price at which you bought your shares is gone down. So you're basically, the value of your shares is down. Should you be worried? Yes and no. Okay, let me explain this. When I say yes, I mean yes, if you buy something at a higher price and the price goes down, of course, it is a loss. But it's only a loss when you sell that product. So you haven't lost the money because you still have the assets, which we've spoken about several times. Your investment is an asset that you bought, a share of an asset that you bought, whichever product, whichever company you bought your asset with. So let's say for instance, you bought a share in Facebook and your share price is down. Of course, your portfolio will show red. So yes, you are down on your shares. Should you be worried? I wouldn't be worried. Especially when you've done your due diligence and you bought from a company that you know as a long, or the potential for growth is high. So no, I won't be worried. You can only worry if you need your money now and you have to sell the shares at a less price. Then yes, of course, you will lose that difference between the drop of the share price. But overall, no, you shouldn't. And I will use Elon Musk recently to give you an example. What happened in December 2022. Did you ask yourself why? Yes, they reported it as a loss. But from a financial point of view, it was not a loss. It was just a reduction of the price of the shares. And basically, he sold some shares too. And to put things into perspective, for you to understand why I'm saying to you, buying an asset in a reputable company, in these big companies, you don't have to worry. Elon Musk sold nearly $40 billion of his shares the year that he bought Twitter. And for someone that owns Tesla to sell Tesla shares, 40 billion worth of shares, of course the price of shares would drop. And if you understand how supply and demand work, the selling of shares means there are more shares of Tesla in the market. So if there's more, price will definitely go down. So when price went down and you value the amount of shares that's left with Elon Musk in Tesla, of course, the value of his shares will go down. So share price went down overall by him selling that amount of shares. And that's what the newspapers were reporting at that time, that he's lost, what, 200 billion because the share price went down. But that was then an opportunity for others to come in. So if you look at share price at the end of December 2022, you will understand why they said Elon Musk had lost that amount of money. But in financial terms, he did not lose that money. He still have the assets. And guess what? Within a couple of months, CNN reported Elon Musk is now the richest person in the world. How do you think that happened? Because if you look at the share price end of December and the share price in February, you will see how much in percentage terms the share price of Tesla had gone up. And that's simply how it works. If the share price go down for so many reasons. So whatever product you decided to invest your money in and you see the share price going down, do your research. Find out why the share price has gone down. There's no need for you to panic. Unless you bought in a company that's volatile in terms of risk-wise. Then, of course, you should be worried. If you buy shares in a company that's going bankrupt, of course, you should be worried. If you buy shares in a startup company, of course, you should be worried, because those companies, especially the startup ones or the ones that have just come on the IPO or start floating shares, yes, they're more volatile because they're just upcoming. But if you buy in these big companies, I don't think you should be, unless you need your money now. If your money is for the long term, and the banks will always tell you, I mean, they will always say to you, invest between 5 and 10 years, because they understand the movement of shares going up and down. And a lot of these changes is mainly due to short-term trading. The traders causes all this movement of shares up and down because they're looking for quick returns. So any bad news can affect the share price to go down. Any good news will cause the share price to go up. So within a few hours, you can see so many differences in share prices. But that should not be your worry, because your concern should be the long-term growth of the company, the long-term effects the growth will have on your share price. So you've invested for 5 years. What you should be focusing on is, what do you think the share price of the company or the value of the company will be in the next 5 years? What are the companies doing, or the company product that you've purchased? What are they doing to make sure that the company is successful? Have you done your research to see how much investment they're putting in the company? Have you done your research to see where the company is going from henceforth? So I personally would not worry if I see the share price of Tesla going down. Personally, I think it's an opportunity, if you still have some more money, to put some more money in. You're buying assets. This is why the banks will encourage you to be buying it on a monthly basis, bit by bit. Set up a direct debit to the bank. They will take your money and invest in shares for you. But like I've said, they will take a chunk of the return. They will. But if you're doing it yourself, yes, learn a little bit. Read about these things so you can manage these things for yourself and keep the chunk of the money to yourself. It's yours. You manage it. You control the risk. If you're going for high risk products, of course, you should expect, bigger losses, or a chance that you're going to lose your money, or some of your money, depending on where exactly or what stage you bought the product. But if you're going for low risk products, then yes, it's manageable because they're low risk. So do your research, find out which companies are low risk, and invest in them. I would rather you invest than keep the money in the bank, because the bank interest they give you is basically next to nothing. And I've said it before, they invest your money and give you a change back. It's just as simple as that. So wherever you want to do, or whatever you want to do, is your choice. I'm not your financial advisor. I'm just sharing my experience with you when it comes to buying of assets, which is buying shares and stocks in companies. Do your own due diligence and invest wisely.